Hi everyone, welcome back to the channel. So I've decided to put together a quick video on the 5 golden rules of investing. So it's only a quick 5-minute video and hopefully you will find it very beneficial indeed. So if we start off then with golden rule number 1, it's all about risk. When it comes to investing, the general rule of thumb is greater reward comes with greater risk. Do you want bigger percentage increases with your initial investment? Well, if so, you can expect more risk to be involved. Let's face it, if all investments carry the same level of risk, why would anyone consider potentially lower returns? A good recommendation is to take more risky investments when you are younger, as your portfolio will have more time to recover in the years ahead if you do face some kind of downturn. So here you might look at an 80-20 split in your portfolio, 80% stocks, 20% bonds. If you're a bit further on in life, it would be wiser to consider less risky options, so maybe even a 50-50 split, 50% stocks, 50% bonds. That brings us on then to golden rule number 2. This again revolves around risk and also diversification. So the rule here is to not put all of your eggs in one basket. It's definitely recommended to try and spread out your investments into different areas, hence reducing the overall risk. So let's look at an example then. Say I have $1,000 and I want to invest it in the stock market. Well, one option would be to take my money and put it into just one business. So when I look at my portfolio, 100% is against one individual company. It might be one great company, but there's higher risk. The other option then is to take my money, for example, and spread it amongst several businesses. Let's say in this example, 5 different businesses. So I've spread it out evenly, $200 into each company. My portfolio then is less risky. Hence, the bottom line with golden rule number 2 is to diversify as much as possible to lower your overall risk exposure. That brings us on then to golden rule number 3, which is about the length of time that we're looking to invest for. If you're looking to invest only for the short term, it is definitely recommended to opt for less risky options. Now, there is no such thing as a risk-free investment. However, as mentioned already, riskier options should be considered over a longer period of time. Another good general rule of thumb in the investing world is to invest for at least 5 years as a minimum. The longer, the better, generally. If you can't manage to do this for 5 years, or you're not able to commit for 5 years, then it's probably best still to steer clear and leave your money in a savings account with your local bank. For the majority of us, investing should always be seen as a minimum 5-year commitment. That brings us on then to golden rule number 4, which is all about reviewing your portfolio on a regular basis. Undoubtedly, assets in your portfolio will move up and down over time, and your portfolio could end up looking very different to what you started off with. Hence, the importance of reviewing your portfolio on a regular basis and making any necessary adjustments accordingly. That brings us on nicely to the 5th and final golden rule. Although it's important to make necessary adjustments to your portfolio, it is also vital not to hit the panic button too soon. Most experts typically recommend reviewing your asset allocation every 6 months. But before you give up on a particular stock or fund, consider why it is disappointed and whether it could do better in the future. That brings us to the end of the video, so thank you very much for watching. Hopefully you found it enjoyable and interesting. If you would hit the like button, that would be greatly appreciated. And if you would subscribe to the channel, that would also be great, so you can stay up to date with all future videos. Finally, if you want to leave some feedback below in the comments, that would also be greatly appreciated.